Hi everyone, hope you're all doing well. Welcome into another video. Today, as the title says, Greggs is crashing, and we're going to take a look at Greggs in a second. Apologies, the video is once again really late. It's like becoming a common theme for me to now upload these videos at like 11 o'clock at night. I'm so sorry, like work's just been absolutely busy, and then by the time I have time to like research, sit down, record it and edit it, yeah, it's ended up being quite late at the moment, so I apologise. I'm sure it will get a little bit less crazy in the next few days, but hey, you know, maybe I should, not be so realistic on life and do what some of these other YouTubers do and just open up with my Ferrari going, yeah, look at me, I'm an amazing stock picker, look at my Ferrari. Hey, I show you guys in actual real life as someone that works a job and also trying to do the stock market business on the side. But yeah, overall, a weird day in the market, weren't it? You know, before we get on to Greggs, just like the stock market in general, such a weird day. Like the stocks opened up so negative, and as the day went on, like it just carried on bleeding a little bit more, and then we kind of got a little bit into the day, you know, 5 o'clock maybe, and then the stocks just started bouncing up and they actually went positive. And then just as I went to record this video, there was just a complete collapse at the close again. Some extreme volatility in the stock market, but not as bad as where it was earlier in the day, to be fair. Same when you look, I'm not even refreshed the, I got the QQQ up here, let me just actually refresh it. Yeah, you see here, a little bit of a sell-off, but yeah, not as low as where it was at the worst point. So, big fluctuations in the US market. Obviously, a lot of talk about the tariffs going on at the moment, that's the fear in the market at the moment. But compared to the UK stocks, it was just another bloodbath in the UK stocks. At least with US stocks, we've had some cracking few months in December, January and February. With the UK stocks, it's just been a bloodbath for the last 6 months, a year, hasn't it? Like, they've just been absolutely smashed. I mean, look at B&M today, down another 4%. The last year alone, you know, it's down 51%. The PE's dropped into like a 7 times PE now. I think it's actually, I think it's even lower than that. I don't even know if that's correct. I think I had it worked out as a 6. I don't know if that's because of the new profit warning. I can't remember what's going on there. And yeah, absolutely crazy. I mean, look at JD Sports. JD Sports down another 3% today. That's since it peaked out at £1.54. That's down, I mean, when did it get to £1.54? Like September time, yeah. And since then, you know, the stock's down 51%. Like some of these UK stores that, you know, imagine walking into a B&M store and a JD store and, you know, you see how busy they are. You know, you see how busy B&M is. You know, you see how busy JD Sports is. It was the only other day I went into a JD Sports and they had moved it from like a smaller store into like a bigger store further down, and they were having like an opening party and like people were queuing up to get in like the JD Sports. And I was there and I was like, I don't really shop at JD Sports, but I'm going to go in it because I'm a shareholder and see what's kind of going on here. And I thought, this is crazy. Like, you know, there's people queuing up excited to get into a new JD Sports because it's even bigger than where it was previously, a new store, and people queuing up to get into it. And yet, you know, if I was to show you that the share price is down 50%, would you assume that the company's lost half its value while you stood in this queue to get into like a new store? It kind of blew my mind. Like, you know, you see all of these stores like being really busy, all these sales still happening, and like, you know, if you were to ask these customers, I mean, they'll probably have no idea what you're on about. But if you went, you know, this company's lost half its value. It's valued it's valued half of what it was 6 months ago. You know, you won't see it. You know, you don't see half the fall in traffic in the store from where it was 6 months. It's insane, and that's the thing with, you know, the stock market sometimes. Like, when you put it into context like that, it shows you how dramatic a 50% drop is in the stock. You know, it's so significant. And you know, obviously 12 times earnings, but I think on a forward basis now, I think JD Sports is gonna, if it does the full year numbers this year, I think it falls down to like a 6 times forward earnings, which is insane. Like JD Sports, 6 times earnings, you know, queuing to get to a new open store, and it's 6 times earnings for that business. It's just, you know, you look at the US today and you went, yeah, that's a bit of a crazy move. What's even more crazy is how much of a bloodbath these UK markets have been for the last few months, and they just keep going lower. You're like, they can't go any lower, and they just keep going lower. Yeah, so much more fear in the UK side of it. But Greggs, the title of the video, yeah, they certainly joined into the fear today. As well, to be fair, this stock actually peaked around September time. I mean, obviously we know what all kind of happened in the September time is all those fears around the new government and the budget started creeping in. It's not a coincidence that all these high street retailers of all these people that they employ have been dipping since that time frame. You know, you could point it down to one thing. But you can see here, you know, peaked around September time, stock's fallen 42%. You know, Greggs, I mean, you know, put it into context of Greggs as well. You know, I go to Greggs, I would say once a week. I'd say I go to Greggs once a week, maybe once every 2 weeks. And, you know, you go in, always busy, you know, queuing out the door. You go at breakfast time, you know, get a sausage sarnie, you go get a sausage roll. You go at lunchtime, always queuing out the door. They're sticking new Greggs down. Straight away, traffic at the store. You know, Greggs is like one of the premium ultimate retail locations in the UK. And, you know, to see that fall down 42% is, you know, unbelievable. And, you know, we already had the drop at January time. But the fact that stock's even dropped even more today, you know, a 13% drop today, you know, that's absolutely crazy. 13 times earnings now. I actually tried to look, I think the 4p is actually 15. And I think there's like a one-time charge of profit coming in that's maybe looking that a little bit lower than what it is. 3.5% dividend yield. They sometimes pay a special dividend as well, so actually the dividend could even be, you know, slightly higher than that. But it's not very often that you get Greggs at these sort of levels. You know, it's kind of back to where it was during the Liz Truss time. Not as much as the CV lows like we've seen with the likes of B&M and JD Sports, but a really, really significant drop that shows you how much fear is kind of, you know, baked in with Greggs at the moment. And you know, like I said, it's some pricing brand power. I know you could argue, guys, it's just a high street retailer, but honestly, I feel like you put a Greggs down anywhere, like straight away the traffic picks up to that store ultimately very quickly, and people like it. You know, people like Greggs. Everyone has to still, at the end of the day, even if we're going through, you know, a bad economy, people are still going to go to Greggs. People like it. It's convenient. It's cheap. You know. Sure, people might. I just realised this guy's like staring at me. He must have seen the cameraman taking this photo. But you know, Greggs is one of those that's still going to do very well whatever the environment is in. Sure, the basket amount might go down. You know, you might go in one day and you go, oh, I was going to get 4 sausage rolls and a gingerbread man, and because it's, the money's a little bit tight at the moment, I'm just going to get the 4 sausage rolls. That might be the case, but they're still going to do very well in many years' time, in my opinion. And it's always been a stock that's historically, you know, been traded at a premium. And also, as a bit of respect, I think Greggs is such a fantastic run business. You know, you look at the amount of times they share money with the workers, you know, bonuses with the workers, how they have treated them through record years, even through the COVID situation. One thing that I don't think they get that much credit on is the Greggs Foundation. Go far beyond many UK companies do. I don't think many people are actually aware of this one, but Greggs actually, I can't even remember, what does it say here? So they opened up in 1999, the breakfast clubs, and they now help more than 75 children over 1,000 schools every day. And what they do is they actually provide, and I think most of you guys will be aware, I actually work in the education system, so I'm working kind of with these guys, but what they do is they provide breakfast to primary schools, and I think they do high schools as well, across the UK, and they supply the food. Now, there's a few generous people that actually give up their like half an hour in the morning to do these breakfast clubs as well, and I don't think they get much credit. You know, I don't think schools in general, staff in general are underpaid. TAs in the education system in the UK are way underpaid for the work they do. It's kind of getting off the Greggs topic here, so just hang with me for a minute. But you know, they support the next generation of people with breakfast, supplying all the food, and the people that serve it, and Greggs supply all the food for it, and they don't get any credit for it, but it's so good of them that they do that. And you know, if I ever thought there was going to be an exception of a company that, you know, it gets a bit of a tax break, it would be Greggs. They do so much for the UK society they don't get any credit for. Anyway, let's get on to some numbers here, because we're quite far in and I've not even started talking about why the stock dropped. So the stock dropped. I struggled to see why. So total sales was up 11%, insane. They got the underlying operating profit because of the impact as well. Pre-tax profit up 8.3%. Underlying diluted EPS was up 11%. Diluted earnings per share up 7%. Dividend hiked up 11%, which is great. Getting lovely increase in your dividend. Total sales up, yep. Like sales in managed shops was up 5.5%, no issue there. Cash balance still strong, increased dividend, and obviously the special dividend. Once again, we talked about how ethically good they are as a business, sharing 20 million with their colleagues. Looking at the current plan, record 229 new shop offerings. You think they can't open up anymore, and they just continue to open up more and more. They also refurbish some sites as well. They are targeting 140 to 150 net openings in 2025, and obviously trying to reach their longer-term opportunity. What they're trying to do, which is 3,000 UK stores. So still, that's kind of the plan for the next few years, is increase those kind of stores. Looking at the evening trade, they have started operating in the evening and looks pretty good. Still growing at pretty good rates here. It's obviously launched some of the new ranges. The app store, the app that they have, more rewards, getting people to kind of come more regularly, because then eventually, you might get that free cup of coffee. Carrying on increasing, you kind of build up that a little bit more of a loyalty network, as you can see here. Delivery sales up 30%. I still can't believe delivery numbers are so strong like this. I look at the rate that sometimes you get an average number of Greggs, an average order of Greggs like £10, and then you get delivered. It's like £5. It's a 50% increase on your checkout, but people still pay it, which is absolutely insane to me, but still seems very popular as well. Investing in the supply chain again, opening obviously the new production at the Newcastle centre that they currently have, and all the other logistics centres. So clearly preparing for more growth going forward. Probably the reason why it dropped on this report was they said that like-for-like sales in company managed shops increased 1.5% year on year in the first 9 weeks of 2025. So obviously this is far behind what they just have reported, so maybe people are spooked, concerns around the macro environment potentially. But I always say this about, like for like, is that there seems, I don't know what it is in the last year, but it seems like a lot more talk about like for like. Like for like is, mostly increasing your prices. That's mostly what it is. Your like for like in Greggs are naturally not going to go up that much, because people aren't going to go from 4 sausage rolls to buying 5 sausage rolls realistically. And the queue can't really get that much busier, because there's always kind of a queue at Greggs. The only way you really increase it is the prices going up. So Greggs look really strong on like for like a year ago, because they're increasing the prices to increase the inflationary environment. That's the reason why like for like went up. Now obviously you probably want it to carry on going up a little bit, and you would hope they have the pricing power to increasing those prices, and maybe right now isn't the best time to do it when you've already done some great prices, but they're still going up. They still probably go up in the right way. And also, as you look here, they put challenging weather conditions in January, followed by improvement in February. I'm sure I read somewhere that I think that's gone up to 2.5% now. And that kind of makes sense, because obviously, Greggs is more of a northern UK kind of business. I can agree, January was awful. The first week of January was grim. I think there was 2 days where I didn't end up going to work because it was snowed off. I think it was a week was just snowed in basically through the UK. So I can see why maybe down slightly from that point of view. But I won't worry about it. Greggs has enough to bounce back from this sort of situation here. And they said that Greggs can manage inflationary headwinds and deliver another year of progress in 2025. They still think they can hit the 2025 numbers. Obviously, the big thing they have with Greggs at the moment, the big tough thing that they've kind of had is the CEO change. Just be aware of that. Sometimes when you've had Roger Whiteside there for years and you've had the new CEO change, it can take some adjustment. So always just be aware of that. Is probably the biggest risk that I would say with the new CEO coming in. But, they've been in there 2 years now and they seem to be doing okay. And they've gone through a pretty tough time. Let's not forget they came in 2022 through the Liz Truss situation, and the last 2 years have been pretty brutal for UK businesses. 12 months ago, a lot of businesses had to deal with the corporation tax. It went from, was it 19%, 20%, up to 25% now. So a lot of them had to deal with the increase in corporation tax and big increases in the living wage as well. And that's why you see the likes of Greggs, the revenue growth was good, but you look at the profit, it didn't really grow that much. In fact, it declined. It went from 142 million to 141 million. So it was a tough year last year for a lot of these businesses that employ a lot of people. And, you look at Greggs again next year, they're going to go through some tough impacts. That's probably why the share price is down. People are concerned about the inflationary that might happen because of the budget. You got the big increases in wages happening because of the budget. You have the NI contributions happening because of the budget. So there's another tough year coming up for a lot of UK businesses, especially those businesses that hire a lot of people. And you look at the forecast again, the forecast for next year is for the profit to stay stagnant once again, 141 million to 141 million. It's exactly the same, even though the company continues to grow. And this is the problem with a lot of the UK businesses at the moment. They're currently growing just to pay extra tax. Last year they had to grow to pay extra tax under the big increase of the living wage under the Tory government and corporation tax under the Tory government. And now you've got the double whammy where you've got a Labour government that are, increasing NI cost and wages once again extreme and putting maybe even more inflationary pressures on business. And once again, Greggs are at a point of view where they're having to grow revenue once again just to generate the same profitability because they have to pay more in cost. It's been a tough time for a lot of these businesses, but at some point you would hope, I say this and I'm going to take with a bit of a pinch of salt, at some point the government has to be more supportive for businesses. The attitude to businesses in the UK in the last 2 years is we're just going to tax you more to try get more money from you. And eventually that's going to catch up with businesses, and you can see here with Greggs, they're trying their best to grow. If there wasn't these big increases in taxes in the last 2 years, imagine where the profitability would be. The profit probably would be sitting around 160 million right now. And then you look at 160 million on a 2.1 billion market cap company, the Greggs would right now be like at 11, 12 fold times earnings, which, is so attractive. But realistically, that's not where we're at the moment. But you would hope at some point that Greggs is going to get to a point of view where they're not going to get, absolutely taxed every time they kind of make any, they kind of breathe, or every time they make a little bit of money. So, when you look at past 2025, the profit once again is expected to go back up to, decent amounts of growth. And hopefully, if you're a shareholder, you'll start making, some, decent money on this. The growth story is still very much there for Greggs. When it comes to buying with Greggs, as well, let's just shout out a fantastic balance sheet here and an amazing cash balance. I will point this out as well, ownership-wise. Obviously, the new CEO came in. I've only got the last 12 months, and I can't go further than that on Simple Wall Street. If you do want this platform, links in the description, by the way, guys. I think it gives you 30% off. There's not much going on from an insider point of view. Like, you look here, there was a sell in October time, and there was a big sell in April time. So clearly the CEO had a good idea that maybe things are going to get a little tough because the CEO was dumping a lot of shares off, and they were selling it at, when it was £27, £28, and right now, what is Greggs? Yeah, it's £18. So the signs there was that the CEO was actually dumping some shares off. That would be something that I kind of wait for. Is like, okay, you're the new CEO, you're going through your kind of first tough time as a CEO. Where you buying? Are you going to buy some shares? You sold out at the top. You could see the top here. So, have you got the confidence to say, actually, what, from here we actually can do quite well? Or do they believe it's going to lower? I think if they feel like it could be still a tough 12 months, I don't think the CEO buys. And I think that's an indicator for you to maybe probably not buy the stock. That is probably one of the signs that I'm kind of waiting for. If the CEO comes in and buys, maybe they think, actually, what, we can kind of kick on from here. And I think realistically, I had the numbers up, but I think Greggs is like 15 forward times earnings. And I look at Greggs and I go, do I realistically want to buy Greggs at 15 forward times earnings? I don't know. Maybe if it was like 10, 20% lower, potentially. And if the like for like stays at these sort of levels, and then we see a little bit of nervousness around the UK economy in April when the budget and inflationary pressures start kicking in, which I think still could happen, by the way. You might get, Greggs still in line. I think they're going to trade in line at the moment, but if they're going to trade in line, I think they have to get the like for like sales up a little bit more from where it was. So you might actually see a little bit of a profit warning later in the year potentially. I don't know. I'm just kind of guessing these things. But from the outside, I look at the valuation, I look at where the UK economy is, and I'm like, you know what? If you buy here, I think you make money in 5 years. But I want, like a big reward. I want to make over. If I'm going to buy Greggs, I want to make over 100% return. And right now, do I think I could get it? Maybe, But if it was a bit lower, I'd be a bit more confident. And maybe that's kind of where I'm at. I feel like with what's still got to come in April, the current government, Rachel Reeves, these inflationary pressures, could you get that one more drop in it? And that's what I'm kind of thinking. And the other thing that I've got to weigh up is that I've already got a lot of stocks that are getting battered because of the consumer confidence, the inflationary pressures, the changes from the government in the likes of the national insurance. I've already got quite a few of those businesses. Now, could I actually already have Greggs, to be fair, but it's not really a big position for me anymore. Whereas I'm kind of concentrating building up in the likes of B&M, for example, and JD Sports, for example. And, we compare Greggs to them sort of stocks. Greggs is probably a better business. That's probably why it's trading a little bit higher on an earnings multiple. But I mean, B&M's down at like a 7 times, 6 times earnings. JD Sports is realistically going to be down at, obviously it's got the one-time impacts in at the moment, but that's realistically down at like a 7, 6 times earnings. And I go, do I want to go pick Greggs up at 15 times earnings at the moment? Or do I want to wait for maybe a little bit more of a drop? And at the moment, I'm already still buying some stocks that might still have a bit of a choppy time at the moment. And the JD Sports and B&M are still half the value what Greggs are. And I think financially, JD Sports could do just as good financials as Greggs. And B&M, maybe not as good financials as Greggs, but at the same time, Greggs is paying a bit of a special dividend, worth pointing out. But, I get a 6% dividend yield from B&M as well. So is it worth holding it from that point of view? And this is the issue at the moment, is that I would, any other time right now, I'd probably be buying Greggs. But there's just the fact that there's just so much there's so much nerves around like the UK retail at the moment that there's just so many opportunities. Next is another one. There's so many opportunities out here to go buy some retail stocks in the UK market. And it's like kind of, unfortunately, it comes down to you just got to pick the ones that you think are probably the best ones. I think Greggs is a good opportunity. I think you can make money from it. Do I think I'll make more money from B&M and JD Sports at the moment? And the answer is that is yes. And that's kind of where I'm at. There's just that, you kind of get the point of view where you're a kid in a candy store. In the UK market, it's like shooting a fish in the barrel a little bit at the moment. There's so many opportunities out there right now. And there's reason why these opportunities are out there. But I think it's at the point of view where I can't go out and build, 20, 30 positions because I just won't have the cash to do it. Because if I start buying Greggs heavily and then it drops and then I've got to buy again and then it drops, I've got to buy again, I've got to put a lot of cash in there. And then at the same time, what happens by then if B&M's gone 10, 20% lower? Do I not want to be buying more, B&M? Gaming Realms is another one out there that I, potentially want to go buy quite aggressively. There's so many opportunities out there. That's the issue at the moment. And that's where it comes to that. You've just got to go with the ones that you think are the best. And right now, I think Greggs is good. Do I think it's as good as some of the other ones out there? Maybe not. So I'm best waiting, so Greggs gets as good as an opportunity as these and then go buy it. It might not get there because it's a cracking business, but that's kind of where I'm at. So, yeah, with Greggs, I don't think it should have dropped as much as what it did today. Sure, there's a little bit of concerns out there, but it's Greggs at the end of the day, guys, Do I buy? I don't think so. I just think there's maybe better opportunities out there. But any other kind of market, if the UK stocks weren't in the dump, Card Factory is another one. If the UK stocks weren't in the dump and it was just this having a dip, I'd probably be a bit more tempted to buy it. But I've just got to prioritise which I think are the best opportunities. But don't get me wrong, I would rate it a buy today. So, that's my thoughts on Greggs, guys. Hope you enjoyed it. Hopefully tomorrow I don't upload the video for you guys at 11 o'clock. I'll try my best. 11 o'clock at night. Or it might even be midnight by the time I get this one up. But thanks for watching, guys, and I'll see you in a bit.